Hey, Security Token Market. I am back with another interview. I'm joined here with Alan Blair, who's the founder and CEO of REI Capital Growth. Alan, thanks for being here.
Thank you, Kyle. I've been looking forward to this interview for a while.
Yeah, we've been talking on the phone for quite a long time, and I know you're working with some innovative strategies with tokenization in the real estate sector. So let's just start from the beginning. Can you walk us through your background and experience in the real estate sector, and then we can go from there?
Sure. I started in the real estate sector after I exited the Marine Corps. I was a helicopter pilot in the Marine Corps in my first career. And I went into business with my dad. And we had 100 families, 2 apartment buildings in the Bronx, a multifamily business. And it was kind of like, just diving in, trying to figure it out. I had no real estate experience at that point, neither did my father. And we just had to figure it out from soup to nuts. And that was even before there were computers. We had to do the rents and everything on cards, and and computerized it. And I was in it for over 20 years. Cool. And experienced a couple of cycles in the market during that time. And then I exited multifamily with several 1031 exchanges and got into different types of real estate and ultimately landed with multi-tenant retail.
Okay, so that brings us to REICG. So when was that business formed, and what's the thesis there?
So with multi-tenant retail, I actually, about 10 years ago, I started with syndicating deals for friends and family, and really got to understand multi-tenant retail and its ups and downs, and I'm a problem solver. So because I have hands-on experience at every single level of real estate operating the business, I always want to figure out how to solve various problems, and that was the origin of REICG. Wanted to figure out how to increase investors' share value in a market where real estate prices are not increasing.
Right, okay. So how are you doing that? What's the structure currently that you're looking to explore?
It's a brand new business model. 100% of all real estate deals are, they sell you an equity position, an equity share or stock, and you're promised or anticipate income and growth. The problem is that equity, you're an owner. And when they distribute income, that's profits. And in the event of any kind of downgrade in profits, like we've experienced in the last 2 years.
Yeah, right, of course.
Guess who gets paid last? Owners get paid last.
The equity owners, yeah.
Right? So we've all experienced some disappointed owners here and there. So I came up with this business model where it's essentially structured exactly like Warren Buffett structures Berkshire Hathaway. Investors invest. He doesn't pay out dividends. We buy profitable business, in this case real estate. We know what the profit is. We can project it out over 10 years because we buy stabilized properties. And then at the end of, as soon as we accumulate enough cash, we buy more properties. We buy more stabilized businesses. And by increasing the net asset value of the fund, we increase the net asset value of the individual stockholders. And that's going to happen uncorrelated to changing real estate prices, which change slowly over time anyway.
So you're going to be taking profitable businesses and then reinvesting those profits into acquiring new properties to increase the underlying
into more profitable businesses. Because when you buy a shopping center, $10, $15 million shopping center, it's essentially a business.
Right.
And you know who your tenants or customers are, and they're all contract. You read the contracts, you read the leases, and you can project out the net operating income for a period of time with a high degree of accuracy.
So are retail, so this is U.S. properties, I assume?
Yes.
So are retail, commercial U.S. properties profitable right now?
Absolutely.
Despite all the issues going on with the pandemic.
Absolutely.
And less foot traffic and some of that stuff?
Yes. Yeah. Look, real estate's taken a hit over the last year and a half, 2 years. But successful companies, successful businesses made more money.
Right.
Because Starbucks never shut down.
It's true.
Right?
Still going there a couple times a week.
Yeah, and a lot of businesses have done that. A lot of the quick service restaurant businesses are now focusing more on drive-through. One of our properties, I have 8 properties under management still with the old business model, is planning on adding a drive-through on the side of one of our properties at their expense.
Right.
So it adds value to the real estate.
Interesting.
So, during the pandemic, my 8 properties, we didn't lose any tenants to
wow.
COVID. However, we gave a lot of tenants a lot of breaks.
Right.
Right? Mm-hmm. And in order to afford those breaks, we went and we negotiated with our lenders. So dealing with lenders is another whole issue why the second half of the funds that we're offering is about income. So we're actually launching 2 funds. REI Capital Growth for growth and REI Capital Income for income. So with that REI Capital Income, we will be selling bonds. And the bonds, essentially, instead of borrowing from banks, we want to borrow from people.
Right.
Right? And those bonds, the result of those bonds will be the debt on the properties we acquire.
Interesting. Okay, cool.
So that way, we can underwrite the debt just like a bank would underwrite it. So it's very secure, very stable income, and the debt gets paid first. So even during COVID, if this structure was in place during COVID, the income bondholders would have received their income without missing a beat.
Fascinating. Okay, so both of these structured assets are actually relative to potentially the same underlying portfolio of properties.
They are synergistic, yes.
Right, okay.
So one entity, one fund will lend to the other for acquisition debt.
So
And this one will pay the bonds.
That's fascinating.
Just like it pays a bank.
So we talked about real estate a little bit. Now let's talk about tokenization, blockchain technology, and the tech behind. How does, in your opinion, how does technology, blockchain specifically, and really tokenization improve asset management and real estate management and all these different pieces that you're talking about?
The primary advantage is it offers an otherwise illiquid asset liquidity. So these funds are designed, the underlying business model is purpose-built to facilitate liquidity with all of the various liquidity exchanges that are being launched. Mm-hmm. So if you're not going to sell an asset on the growth side, investors need a way to get out. Right? But with this business model and with the tokenization, investors now can decide for themselves when they want to sell their shares. The growth side, our projections are that we will be able to grow investors' equity 8 to 9% compounded annually, thereby doubling their equity investment every 8 to 9 years. And if there's another pandemic, okay, so we'll go down to 6 or 7% annually, as opposed to 8 or 9. And we like to underpromise and overdeliver, so we're anticipating good things.
Awesome. So, what investors, what kind of individual are you targeting with a fund like this?
This fund is designed for a large number of small investors. We want to target average, everyday investors in pursuit of the American dream. Passive investment and cross-border investors pursuing the American dream. Because of the nature of the structure, unlike a REIT, investors don't have to pay tax on the income every single year. Give half of it back, give 30% of it back to the government.
Because it's reinvested back through the fund.
Because our fund is elected to be taxed as a C Corp, we pay taxes on the corporate level. So the investors don't have to pay tax on the profits every year. We can reinvest the profits on behalf of the investors and grow their wealth. And it's not even within an IRA.
Right, fascinating.
And then when they do decide that they want to sell their shares, it's a capital gains event as opposed to ordinary income tax.
Right. Very cool. So what size of fund are you targeting? Is it similar for each one? Like the debt issuance, how does that is that relative to
We'd like to keep them approximately equal.
Right.
Even though on the debt side, it's 65% loan to value on the acquisition.
Okay.
But on the equity side, we have a higher cost of capital.
Right, of course.
Right? So we've launched currently as Reg S only.
Okay.
At 50 million and 50 billion. And we are in the process of filing with the SEC for Reg A+.
Nice.
In which case we'll be able to accept unaccredited investors anywhere in the world. And we hope to be able to raise $75 and $75 million every year going forward, because these funds will perform better with more scale. And the larger and faster we scale, the better the growth will be.
Fantastic. So what's the next step from here? Is it just to continue to scaling those two funds, or do you see other structures?
Well, we are launching these funds now. So we are in pursuit of some lead investors that share our vision, that share our goals, that want to get real social impact to regular folks all over the world, and allowing people to pursue the American dream without even having to immigrate to the United States, I might add. And if we can find some lead investors to help us launch this fund in a major way, we can achieve scale quickly and then broadcast to the world the success that we have, and let the folks around the world and the United States understand that we've built a better mousetrap. And hopefully they will beat a path to our door, and we'll be funded to the max year over year over year.
Fantastic. So where can an investor or an issuer or someone figure out how to contact you, how to learn more about the fund?
It's real easy. REI Capital Growth.com. We have both funds co-located in the same brand or the same website, because we have a similar sponsor. The sponsor is REI Capital Management.
Okay.
It's sponsoring both funds.
Great.
That's the network of it.
Cool. So check out REI Capital Growth. Alan, thank you so much for being here. It's been great to connect with you, and we're happy to be a part of the Digital Assets and Securities Conference together.
It's been great. You know, I caught your little prelude up to the conference saying this is the conference of the year.
It's the conference of the year.
I tell you, I think it is.
It's come out great. We've had some awesome, an awesome group of people and some really good interviews, and this is yet another one. So thank you for joining us, Alan.
It's always fun. Thank you. Take care.